one more piece of risk management theory before I move on, but this is quite important to understand because we tend, when we're thinking about engaging a risk advisor or insurance specialist, that the only focus is going to be on insurance. But actually, we want to have a bigger conversation, which is firstly understanding your situation, understanding your risks, forecasting which of those risks are important to manage and how big the impact will be, and then actually think about, well, what are some things you could do in your business, in your personal life, that will help you make you more resilient to risk. So let me give you a simple example. We frequently will go in and look at small business, and one of the things we do as part of that is look at their financial statements. And one of the things we want to understand is, what's the retained capital in the business? How much cash has the business got in the bank on average that will cover its fixed operating expenses? So have we got enough cash there on average that if for 3 months you couldn't generate revenue, the business would be able to keep paying its way? The reality is, I know we've got one accountant in the room, the reality is that we know for most small businesses, they probably haven't even got enough cash in the bank to cover 2 or 3 weeks or 4 weeks. So what that means is that the small business is highly vulnerable to quite what I call small shocks if something happens to the key individual. So a way of retaining risk, making your business more financially resilient, would 5%. Greater than 5? Less than 1%? Greater than 5%? No takers? Okay, so thank you for answering. 0.3%. It is minuscule. Now, good question. So why have I got fire insurance? Because, go back to our pyramid. It's a perfect insurable risk. Hardly ever happens, but for most of us, if our house burns down and we haven't got it insured, it's a catastrophic financial event, right? So it's a good business decision and a good personal decision. On the other hand, it's probably not such a good decision when you buy your car insurance to buy insurance to cover a broken windscreen. Feels good at the time when somebody chips your windscreen and you have to go and get it repaired, but I can assure you that the insurance company will be charging you as much for that in your premium as it costs them to repair it. Because how many of us have had chipped windscreens that need repairs in our cars? Lots, most of us. So if we think about the risk for human capital, so this is about people risk now, these risks start to become quite serious. They're way, way higher than the risk of a property burning down. So if you are a male between the ages of 45 and 64, then you have a 14% chance, there are 100 in the room, 14 of you would be likely to have a period of disability for 6 months or longer. So remember, your house burning down, 0.3%. 14%. Women, unfortunately, we have a higher rate of probability, and this is well borne out worldwide across statistics over many years now. As much as I argue that women never get sick, unfortunately, if we look at the insurance statistics in terms of illness that leads to disability claims, the evidence does say we tend to do that a little bit more often. So 16% of us would have a period of time of 6 months or longer. So try and imagine, if you're a business owner, you not being in that business for 6 months. What would it do to your business? And then consider the probability of that risk. The other thing that is really important, and probably more so I find this with European Kiwi people, we're very used to our ACC environment in New Zealand. And we tend to take the attitude that I don't need to have income protection, as an example, because if I have an accident, ACC will pay out my claim. However, there's a couple of problems with that, and we're going to look at this later on. One of the first ones is the most significant cause of long-term disablement is illness, which ACC does not cover. So many of us are going to have this period of disablement, but we can't turn to ACC because it's not an accident type of event. And our chances that we will be off work for the long term, 6 months or longer, is 2.6 times greater if it's caused by illness than it is by accident. So in some ways, disability risk kind of is weird on this triangle because 14%, 16%, that's actually really high probability. And if I'm a business owner, it's also going to be a very high impact. It's probably going to be catastrophic. So it's one of those ones that almost inverts the triangle. Okay,